Market structure, key levels, and price action, really the three things that you need in order to take successful trades every day. What's up, everybody? This is Josh from Red Short Trades. I'm really excited to share with you a trade I took today. Now, today was an FOMC day, and typically I stay out of the market on an FOMC day, primarily because price action isn't really happening, volume isn't really happening, volatility isn't really happening, and you really need that in order to move a market. But today I was noticing in the pre-market action, along with once the market opened, we were right around a key level, and I started to see the candles move in the way that they needed to move to be able to give me some potential upside. I decided to take a trade, paid off. I wanted to walk you through the trade so you can learn what I was looking at, what happened, and how I was able to assess my risk to reward and then go from there. So here we are in Webull. I traded the Qs today, traded some SPY as well, but here's what I was taking a look at. If I go back to the 4-hour time frame, super important, take a look at the higher time frame to be able to assess where your key levels are before you pick your entries and exits. Effectively, what we have here is we had this uptrend, and we've been breaking key levels on this downtrend move here. So we've had this pullback on the market, which is great about options contracts. I could trade both sides of the market. We saw this break of this 468 level here. And this 468 level here was really something that was getting tapped in the prior days over the course of the past week. But there was a key support level that we saw here at 461. As you could see right here, it was rejected down, and then we saw another tap here, and then we broke it, and then we retested it. Beautiful break and retest. That's why the strategy is so awesome and powerful. And then we kind of broke it here, but we couldn't hang underneath it. So a lot of breaks, but kind of fake outs as the market climbed. And so what we saw, what I was looking for, the two key levels I was really looking at was this level here, this 461 level. And to be honest, after the pullback yesterday, I was really initially thinking that we were going to see some reaction around this 461 and potentially more of a downside move. And instead, what we saw pre-market was we saw this massive gap up, and we were right back up around this 468 level on Qs. So once I jumped into the 5-minute chart, I took a look at the pre-market, saw what was happening, saw this big jump up. We were above 461. We had this big push down and then pull up again in the pre-market, and it was continuing to climb. So this instantly made me wonder what was going to happen around 468. So once the market opened, I went ahead and drew out my levels. I was using just the primary level of the 468 as my pre-market high rather than drawing out pre-market high and pre-market low. Pre-market low is so far down here, we would have had to show some market structure regression in order for me to really take a move to the downside or find some support for an upside move down at the 461 level that I had down here. So I really was just kind of curious, again, not initially going into an FOMC day to take a trade, what was going to happen around 468. So we saw this initial push down, which made me think, okay, maybe we're doing a rejection. Maybe it's bearish. We saw a really big candle movement down here, which is showing some good volume to the downside. And then we broke back up. I was like, let's see if we test this level. Didn't test it, shot straight through it on the 1-minute chart and created a new high right here. And whenever we create a new high, we need to understand what this is pertaining to for market structure. So whenever we create a new high here, and then that is superseding this other high here, this is where market structure comes in. We're creating new highs. We want to create higher highs and higher lows. That shows us that we're potentially looking at an uptrend. And what do you know down here? What did we put in after we pulled back? We didn't tap and retest the 468 mark. So I didn't find an entry. I thought I might find an entry here, but I waited. Always wait when you're in doubt. Make sure you're looking for confirmation that we are in fact rejecting and are in fact going to the upside. We saw this move to the downside here. And then what did we do? Well, I'll be darned, you have a higher low here. So we saw this initial push down, this break above the initial high, and then a pull back down to create a higher low. And we started to kind of dance up to the 468. Wasn't sure what we were going to see once we broke above, but we broke above the key level here, put in this wonderful candle here, which is exactly the kind of candle that I want to take an entry on. This is a hammer candle. What it's showing us is it's showing us based off this really long wick that dipped right into our 468 level. Sellers tried to bring the price all the way down here to break the level to the downside, and buyers stepped in and pushed the price all the way up past the starting point, which gave us a great entry. So we set up our long position here, our stop loss just below the market structure break. We obviously had this dancing up, and so the market structure break was just a little bit below the 468 level right here, below these candles here. And so we set it just below the body of these candles. And then obviously we are targeting a 1-to-2 risk to reward ratio initially, which is what we ended up getting. Took a little bit. We had to weather a few pullbacks. But once we broke here, I took partials off here, and then I took a few more off up here, just as I started to see some weakness show in the candles. Was a beautiful $1,000 trade. This is exactly the kind of break and retest setup off of a key level I look to trade every single day. So really, there are only 3 things you really need to understand. You need to understand where your key levels on a higher time frame. That's where the most liquidity is ultimately sitting. You need to understand market structure. Is it creating higher highs and higher lows, or lower highs and lower lows? And that's going to give you an indication of the direction you potentially want to trade. If you're a break and retest trader like myself, I do trade reversals every now and then, learning to get better at it. I actually took a really beautiful slice off this reversal that we ended up having on this day here. Not focusing on trading on that. I'm still figuring out the best path to trading reversal. So I will share what I learned on that once I am able to have a really clear perspective on when I pick my entries and exits. But cut the bounce off the really nice move down here for an end of day push. But this first trade of the day really is when you're ultimately going to see the biggest bang for your buck. So I hope this was helpful. If it was, definitely leave a like and pound that subscribe button like you mean it, so you can continue to get more awesome content here. Again, keeping it simple. Qs, the QQQ and the SPY, and doing break and retest off key levels, focusing on market structure, understanding price action, what the candles are doing on the chart. Notice too how it was a naked chart. I don't have any indicators. I don't take a look at, sometimes I'll pop VWAP on there, but I don't really focus on any lines. I don't like to clutter it up. I just like to look at what is happening on the chart as it's happening to be able to make my thesis and ultimately take my trades. So I hope this was helpful. Definitely stay tuned. We'll be dropping more on the channel soon. Thanks.